I want you to think about something for a moment. Right now, millions of retail investors are staring at XRP sitting at $1.35, watching it go sideways for days. And some of them are quietly starting to give up. They're seeing red candles. They're seeing fear indexes. They're seeing geopolitical fire, literally. And they're asking themselves, why isn't this market moving? But while that question is being asked out loud on social media, something very different is happening in the silence. Something that does not show up on the one-day chart. Something that the mainstream financial press is not connecting the dots on. What I'm about to break down today is not being discussed the way it needs to be. And before I get into it, understand this. The thing that is moving right now is not the price. It's the architecture. And once you see what that means, you will never look at this chart the same way again. Welcome back. I'm glad you're here. Today we're breaking down 3 signals hiding inside XRP's current silence. Signals that institutions have already decoded. We're going deep into the mechanics of the Genius Act, BlackRock's $5.5 trillion move, and a connection made this week between Ripple and the US stock clearing system that most people scrolled right past. If this is the level of analysis you've been looking for, you already know what to do. And if you want this breakdown every time something significant moves in this space, the subscribe button is right there. No pressure. Let me start with the hard truth that most analysts are completely avoiding. The reason XRP looks boring right now has nothing to do with XRP losing relevance. It has everything to do with how major financial infrastructure gets assembled. You don't build a highway by starting traffic on it first. You lay the road. You install the exits. You connect the on-ramps. And only after all of that is in place does the traffic start moving. That is exactly the phase we are in. Let's talk about the Genius Act, because this is where most people stop at the surface and miss the depth entirely. The Genius Act was signed into law in July 2025. It establishes the first federal framework for US dollar-backed stablecoins. And on the surface, people see that and they think, okay, so USDC and USDT get regulated. What does that have to do with XRP? Here is what they are missing. The Genius Act mandates 100% liquid reserves for every stablecoin issuer. What that means in practice is this. You are going to see an explosion of bank-issued stablecoins. JP Morgan's stablecoin, Bank of America's stablecoin, national banks from Japan, Europe, the UAE, each launching their own regulated digital dollar equivalents. All of them compliant. All of them operating on different rails. Now here's the problem. JP Morgan's stablecoin cannot directly move into a European bank stablecoin. They are not going to trust each other's coin. No bank is going to accept a competitor's token as direct settlement. No government is going to settle cross-border in another country's digitized currency without a neutral intermediate layer. That neutral intermediate layer, the bridge between every stablecoin issued by every bank, every country, every institution in the world, that is the exact role XRP was engineered to fill from day one. Think about what that actually means at scale. Every time a Genius Act-compliant stablecoin moves internationally, it will need a bridge. And the bridge that is already live, already proven, already built into the rails of institutions in over 55 countries, that's XRP. The world built the problem. Ripple already built the solution. Most people just haven't connected those two facts yet. But when you see the actual math behind what that means for supply, the picture becomes impossible to ignore. Here's the math that most retail investors are not running. Right now, sitting trapped inside the global banking system, there is approximately $27 trillion locked in Nostro and Vostro accounts. These are the pre-funded accounts banks hold in foreign countries just to facilitate cross-border payments. That capital sits idle, doing nothing, earning nothing, just waiting to be used as collateral for international settlements. That is $27 trillion of dead money. And that number exists because there has never been a sufficiently neutral, fast, and scalable bridge asset to replace it. Now layer on top of that the global cross-border payments market, $150 trillion annually. The foreign exchange market moves $7.5 trillion every single day. And the derivatives market that sits above all of this? That is a $1.20 quadrillion ecosystem. These are the markets that traditional finance has been operating in for decades, slow, expensive, and siloed. Now let's talk about XRP's fixed supply. There will only ever be 100 billion XRP. That number does not change. Of those 100 billion, approximately 57 billion are in active circulation. The rest are locked in escrow, being released, and overwhelmingly relocked on a monthly schedule. Here is the math that the crowd ignores. If even a fraction of the $27 trillion in Nostro/Vostro capital starts flowing through XRP as a bridge asset, the demand-to-supply ratio becomes structurally transformative. At current price, there is not enough liquid XRP to absorb that level of institutional demand without a significant price adjustment. This is not a prediction. It is a mathematical requirement of the system. Higher price means fewer tokens needed per transaction. Higher price means less volatility per settlement. Higher price is not just good for holders. It is a functional requirement for XRP to do its job at institutional scale. The system does not work at $1.35 when trillions are flowing through it. The math makes that clear. And now that we have the math, let's look at what the biggest financial institutions in the world are actually doing right now. Because their actions are not speculative. They are confirming everything we just calculated. While retail investors have been panic-checking the daily chart and exiting positions out of frustration, the institutional signal around XRP has never been stronger. Let me give you the 3 most important data points from this week alone. First, Bitcoin ETF outflows just hit negative $348.9 million, one of the largest single-week outflow events in several weeks. Fidelity alone pulled back $158.5 million. BlackRock saw $143.5 million in outflows from its Bitcoin ETF product. The mainstream narrative said Bitcoin ETFs were the biggest story in crypto. That narrative is now being revised in real time. Meanwhile, XRP ETFs are absorbing inflows. While money bleeds out of Bitcoin exposure, institutional capital is actively moving into XRP products. That is not an accident. That is not retail FOMO. That is calculated repositioning by funds and custodians who understand something about XRP's utility that the average investor is still catching up to. Brad Garlinghouse said it directly, and I want you to hear the specific word he used. He called it pent-up demand. He also pointed to something that almost nobody is talking about. XRP ETFs are now being used as lending collateral by institutions. That is not just an investment product. That is infrastructure. That is XRP being embedded into the financial system at the institutional layer. Second, BlackRock's CFO, Martin Small, confirmed that BlackRock plans to tokenize its entire ETF complex. All 1,700 funds, approximately $5.5 trillion in assets, on public blockchains within the next 3 to 12 months. He said this is not a project under consideration. It is already in motion. And third, Ripple's Hidden Road just connected to the DTCC's NSCC directory this week. For those who don't know what that means, the DTCC is the organization that clears and settles virtually every stock trade in the United States. Hidden Road just linked the XRP ledger directly to that clearing system. The pipe has been soldered to the wall. So let me ask you this directly. Do you believe BlackRock, Fidelity, and the DTCC are all moving in the same direction by coincidence? Or are they positioned for something that retail has not priced in yet? Drop your answer below. One word is enough. And if you want to be here when the next catalyst hits, a lot of people are finding this channel right at the inflection point. Stay connected. Let me put the timeline in front of you clearly, because the convergence of what is coming is not something you want to see in hindsight. End of April 2026. That is the current target Brad Garlinghouse has placed on the Clarity Act passing in the United States. And he is not guessing. He put the probability at 90% after a series of high-level meetings at the White House between crypto executives, banking representatives, and lawmakers. The Clarity Act will create a unified federal framework defining digital assets, what falls under SEC oversight, and what falls under the CFTC. Once this passes, the legal ambiguity that has kept institutional capital on the sidelines dissolves overnight. November 2026. That is the full implementation deadline for the Genius Act. By that date, every stablecoin issuer in the United States must be fully compliant. Every bank-issued stablecoin, every fintech-issued stable token must operate within that federal framework. That is when the bridge asset demand becomes mandatory infrastructure, not optional product. And within 3 to 12 months from now, BlackRock's tokenization window. $5.5 trillion moving onto public blockchain infrastructure. The XRP ledger already connected to the US stock clearing system through Hidden Road. These three timelines do not exist in isolation. They converge. And when catalysts converge at this density, markets do not move incrementally. They move in discontinuous jumps. The wait-and-see money becomes all-in money almost instantly. But here's what most people are still not seeing, and it has to do with supply. The window is not just closing because of regulatory clarity. It is closing because of what is happening to liquid XRP right now. We are moving from an era of abundance to an era of scarcity. And that shift is already happening in the background, whether the price reflects it yet or not. Every time an institution moves XRP into a multi-signature cold storage vault or uses it as lending collateral in an ETF structure, that token does not return to the open market at a 15% profit. It is gone, locked, out of circulation for months, possibly years. And those positions are growing every single week. Exchange reserves are tightening. The liquid, freely tradable supply of XRP is shrinking at the same time that inflows into XRP ETFs are accelerating. These two forces, supply compression and demand growth, are building pressure that is not visible on the one-day chart, but it is visible in the on-chain data. Here is the reality. The people who keep waiting for the right moment to enter are not waiting for lower risk. They are waiting for higher prices. That is what waiting always produces in a system being compressed like this. Once the Clarity Act passes and the institutional gates open, the risk premium that currently exists in XRP pricing vanishes. The price gaps to where the math says it should be, not gradually, but suddenly. The door is not wide open right now. It is closing. And I know some of you are feeling the weight of that while watching red candles. So let's address that directly. I know the current market is frustrating. I know sideways is the one condition that tests conviction the most. It doesn't give you the adrenaline of a crash to buy. It doesn't give you the validation of a pump to celebrate. It just sits there, grinding, compressing. But as an analyst, I am trained to separate noise from signal. And right now the noise is the price chart. The signal is everything we just walked through. The geopolitical tension that everyone expected to crash the market did not flinch. Oil depots in flames near Tehran, no Bitcoin dump. Presidential tariff announcements, no market panic. Something is changing in how this market responds to uncertainty. Either the market has priced everything in, or it is being held steady by actors larger than retail sentiment. Being early feels exactly like being wrong, right up until the moment the structure catches up with the thesis. The question is not whether the underlying mechanics we discussed today are real. The Genius Act is law. The Clarity Act is 90% likely by April. BlackRock's tokenization is described as a fait accompli by their own CFO. Hidden Road is connected to the DTCC. These are not rumors. They are documented, verifiable facts. The question is simply, who will still be holding when those facts begin reflecting in the price? And that brings me to the most important thing I want to leave you with today. Here is the final payoff for those of you who stayed until the end. Ripple's Hidden Road connecting to the DTCC this week was not a press release. It was not a partnership announcement. It was the moment the pipe was physically soldered to the wall of the global financial system. The XRP ledger now has a direct connection to the infrastructure that clears and settles every stock trade in the United States. That is not a speculative thesis. That is a technical reality. The water is not flowing yet, but the pipes are complete. When the Clarity Act opens the valve and the Genius Act stablecoin wave creates the pressure, everything moves through those pipes. Price is a lagging indicator. Structure is the leading one. And the structure has never been more complete than it is right now. So I want to leave you with one question, and I genuinely want to read the answers. Now that you've seen the full picture, what is the single catalyst you are watching most closely heading into the second half of 2026? Drop it below. I read every comment. Stay patient. Stay rational. And as always, we do not wait for the future. We plan for it. I'll see you in the next one. If you want to be there for the next breakdown when the next phase of this unfolds, you know what to do.